All right. Ni hao, motherfuckers. I'm really glad to be in Taiwan. I've been coming to this beautiful country for the past 10 years. Very short flight from Hong Kong, and love the food, love the people, especially love the clubbing, which some of you will find out on Wednesday night. So, cryptocurrency trading and the state of the derivatives market. Now, we at BitMEX pay our lawyers way too much money to produce this amazing text that you can't read, but basically it tells you that we don't offer financial advice. Don't believe anything I tell you. It doesn't mean you're going to make any money. So we got that straight, and now we can go on to something else. So when I started in crypto in 2013, and I read the white paper, the first thing I thought was, how do you trade this asset? And I went around and I looked at all the different platforms out there, and I discovered a small exchange called ICBit. And these were the first guys to do Bitcoin futures. There's two Russian dudes living in the Caribbean somewhere. They're anonymous, and they operated a very shittily looking HTML website where we traded futures contracts. And that's really where I got the idea that derivatives is definitely going to be a big thing. And given that my background as a derivatives trader in Hong Kong with equities and FX, I thought Bitcoin needed a better market as well. And the reason why I love derivatives is because you can attach a lot of leverage to something and trade massive notionals, charge obviously very healthy fees, and people love trading this stuff. And it's very flattering to see the maturation of this market back in 2014 when I was trying to pitch VC firms that, come trade Bitcoin derivatives. This is going to be a big thing. The spot markets, it's going to dwarf the volumes. And they laughed me out of the room for the next 2.5 years. But now we basically have a whole hall filled with people trying to imitate what we've been able to create at BitMEX. And so what we're seeing today is that derivatives markets for crypto trade in the tens of billions of dollars per day. We also have the crypto-to-crypto trading markets. Obviously, Binance is king there. And then, there's standard spot markets, so fiat to crypto. And sort of this really encompasses the trader experience right now in cryptocurrencies. So if we just take a quick look at daily trading volumes, what we can see here is, obviously, we lead the market in terms of average daily trading, and we're about, 10% of all trading volume across these three categories. Now, if you take a look at traditional foreign exchange, there's a triennial survey published by the Bank of International Settlements every year, and it lists the trading volumes for spot and foreign exchange derivatives. And what you see is that FX derivatives trade probably about $5 trillion US dollars a day, and spot volumes are about $800 billion-ish dollars a day. So we really have a long way to go in terms of derivatives volume compared to spot. So if you think shit is crazy now with 100x leverage and almost $20 billion a day going through these markets, just wait until Bitcoin reaches $1 trillion asset class and the amount of notional that's going to go through on derivatives platforms. So here's another chart illustrating spot versus derivatives trading volume. So obviously, if you look at partially the US dollar market, derivatives is definitely eclipsing what's going on in the spot markets. And really, that's down to leverage, right? Bitcoin is fun, but it's a hell of a lot fucking more fun on 100 times leverage. Your palms start sweating like, oh man, am I going to be up 2x in the next 5 minutes, or am I going to bust out, right? And that's really entertaining, and that's why people trade this stuff. And so when you couple the most volatile asset in the world with extremely high leverage, you have a recipe for success. Because at the end of the day, we are all in the entertainment business of traders. You sit down at your computer or on your mobile phone, and you're trying to escape your boring, mundane reality of Facebook, Instagram, WeChat, or whatever the fucking social media platform that you're on, and you can come trade some crypto because it's really, really interesting. And so this chart really illustrates that. And as more and more exchanges start to discover the amazing feature that you can essentially trade infinite amount of notional without moving physical assets between anyone else, this ratio is going to increase even further. And then here's a chart showing our market share for the cryptocurrency market over the past year. And sort of it's hovered around between 60 to 70% of the market. And really, this is down to a product that we brought to market in May of 2016, the Bitcoin Perpetual swap. And essentially, the problem that we were trying to solve back then was that in the crypto space, people don't really understand derivatives, even today. Most of the products out there on the market are extremely exotic because most products settle in Bitcoin but use a price that is priced in US dollars and some sort of fiat currency. And so in order to make this possible, you have to do some very funky things with the structure of the product, which makes it very nonlinear. Now, probably half of you in this room don't understand a fucking word that I said, but you still trade. So at the end of the day, it's about making this very, very simple. And probably up until about a year ago, it was very, very complicated. You know, futures contracts, they have expiry dates. They trade at a different price than the spot market. People still don't understand this. Even today, we had a futures contract roll about a week ago for our quarterly altcoin contracts. And I saw my Twitter feed blowing up where people accused me of being a scammer because their positions went away on expiry. No fucking shit they did. That's what happens on expiry. So in order to ameliorate this situation where traders were accusing us of scamming them because the futures contract traded at a different price than the price of immediate delivery, aka the spot market, we created the perpetual swap contract. And essentially, it's a leveraged derivative that mimics margin trading and has now, over the past 2 years, become the market standard for the most liquid trading products. And we offer it, our competing platforms offer this swap contract as well because it appeals to a crypto trader who wants simplicity but also wants very, very, very high leverage. And they want to see all this complexity hidden in a simple wrapper. And so here's our open interest. We made these charts before we hit $1 billion open interest last week, and then the price crashed. But essentially, what we can see here is that, you know, the CME's done a great job. They have a totally different market than they service than us. They service more institutional investors in the United States and yada, yada, yada. Obviously, the open interest shows that people are putting on larger and larger positions. Part of this is due to just the increasing liquidity of the platform. Another part is due to our large insurance fund. Some people think that that's our hookers and blow fund that we're, you know, snorting cocaine in the office with 30,000 Bitcoin. But in actual fact, this money is being used to safeguard the integrity of our markets. The larger this fund grows, the more willing somebody is to put on a large position on our platform. And if you're, you know, grading different derivatives platforms, you want to see how likely am I going to get paid out in the event that I win. Because unlike traditional exchanges, most Bitcoin derivatives contracts are limited liability. Meaning if I put 1 Bitcoin in as margin, that's a maximum amount of money that I can lose trading. Because the exchange is not going to sue me for my money. It's obviously a very bad business model. And because of the multiple jurisdictions that most of these platforms deal in, it's impossible to enforce these contracts in a court of law and extremely expensive. Which basically means as a retail trader, you essentially have short-term options contracts because your downside is limited to your initial margin, but your upside is potentially unlimited if the exchange does a good job bringing a diverse set of market participants into its market. And sort of as people become more comfortable, the open interest rises. And, you know, obviously now I think the last I checked, it's about, you know, $750 million in terms of, you know, open interest. And as I said before, we hit $1 billion last week. And so here's another chart of perpetual swap trading volume with the decline in Bitcoin price. Now, obviously, 2018 was a very painful year for the industry. We started, end of 2017 at a price of close to $20,000. We ended the year, close to, $3,000 to $4,000 price range. Now, in that span of time, our volumes actually for 2018 versus 2017 were 6 times higher. So it goes to show that derivatives trading will perform well in a market that goes up or a market that goes down. But what really cannot happen is a sideways market. People hate boring markets. If you really wanted no volatility, then you would go and trade the S&P 500 because it moves 50 basis points a day. You're not going to bust out in 5 minutes. But that's what people want to see in crypto. They want that high volatility. They want to trade the shitcoin. They want to trade Bitcoin when it goes up 40% in 2 days and down 40% in the next 2 days. That's extremely interesting. That keeps people coming back and trading more. So we will see derivatives markets and volumes continue to improve as long as volatility stays strong in the crypto markets. So here's an interesting case study about the power of derivatives. So we have this swap that we created, and initially it was is on our Bitcoin versus US dollar markets. So obviously we want to take this successful concept and bring it to our altcoin markets. Previous to August of last year, we only had futures contracts that expired every 3 months. And obviously, we want to increase liquidity across our pairs, so we decided as a company that we were going to bring the Perpetual swap to an altcoin market. And so we chose the number 2 shitcoin, Ethereum, and we launched a market on this coin in August of 2018. And the quirk that we did here was we made a Perpetual swap that essentially used Bitcoin as margin, but traded an Ether versus US dollar price. Now, if you've traded on BitMEX, you know that we don't accept any other currency besides Bitcoin as collateral. And there's various reasons for that. One of them is simplicity and security. And the other is that you don't really need to accept more forms of collateral. The beauty of derivatives is that I can structure any type of risk as long as everyone's providing me the same type of collateral, in this case, Bitcoin. So we created what's called a quanto derivative on the Ether versus US dollar price. The underlying price is happening in US dollars, but you're not receiving US dollars as profit or loss. You're not posting US dollars as collateral. You're posting Bitcoin, which is perfect for most of the people in the industry. They just want to enter with Bitcoin, trade, hopefully make some more Bitcoin, and leave the platform. So we thought, okay, let's bring this Perpetual Quanto futures contract on the Ethereum market. And as you can see here, the market launched in about August of 2018. And within about a month and a half, we were about 50 to 75% of the market volume of the entire Ether versus US dollar market. So what this shows you is the power of derivatives and the speed at which they can eclipse the spot markets. Now, this is not anything revolutionary. We didn't sort of reinvent the wheel here. All we did was look at trends that have happened before in traditional finance and applied them to crypto. And we know that in traditional finance, derivatives trade more than spot. So it should be the same thing in the Ethereum market. And even today still, our Ethereum Perpetual swap is the most popular contract for trading Ether versus US dollar risk. And we've seen other platforms take this concept and apply it to other coins other than Bitcoin as well. All right, no questions. But I have some time left, so we can talk about some of the things that we're looking at in the future of the derivatives market and what the trends that we're going to see. So obviously, we're going to have more and more platforms starting their own derivatives offering. And people are always ask me, Arthur, are you worried that people are, that everyone's trying to start their own, derivatives platform? I'm like, that's fucking awesome. Because at the end of the day, everyone's going to try a different flavor of derivative to appeal to a market that they believe is not being served by the incumbents. Now, right, they might gain some market share from us and from competitors, but there are lots of trading shops, and what they desire are more places to trade similar risk, right? So one contract might expire a few days later. It might have a few different terms or conditions than another contract. Now, for the average trader who doesn't read anything, I know because I see they get liquidated every day because they don't read our fucking documents, they're not going to notice these subtleties, and the prices are going to be different. And these shops, these trading shops, are going to arbitrage the differences in these derivative markets until these contracts are priced to perfection. So the more platforms that offer derivatives, the more clients trade. The more clients trade, the more money I make. So I'm extremely happy when there are competing platforms offering similar but different products on cryptocurrencies. Another trend, or we're going to see the institutionalization of crypto. I don't really see Goldman Sachs or JP Morgan or one of these financial institutions jumping headfirst into Bitcoin. If they were doing that, then let's go back here. This chart here, the CME would be kicking our ass in Bitcoin if Goldman Sachs really was trading Bitcoin. Because if you think about it, an organization like Goldman or JP or Fidelity or any of these large financial institutions will never trade with a 5-year-old startup with no regulatory licenses in the United States, or alphabet letter agency has given them a piece of paper that says they can now trade derivatives. They're just not going to trade on those places. They will, however, trade with the CME. So if Goldman Sachs or JP or one of these banks really, really believed in crypto, they can take their US dollars, they can deposit them with the CME or one of its custodians and trade Bitcoin risk. They don't need to do anything new. They don't need to set up any new technological systems. They don't need to onboard any new credit relationships. So if institutions really, really believed in crypto, the CME will be trading multiples of what it's trading today. Crypto is, and I think will remain, a retail-driven phenomenon. And as more platforms and entrepreneurs discover the beauty of derivatives and what you can do with financial engineering, they will bring out new and different products to cater to people that aren't being served by the incumbents. Because as you can imagine, as a company grows, your speed at which you can offer new products lessens because you have to spend time on what's making you money today. So we're going to see more products. They're going to be more differentiated. They're going to be more interesting. Another longer-term trend is obviously, optionality on crypto. It's still a very nascent market. There are a few platforms that are offering these contracts to people. Now, I still think that the liquidity and more generally the education of retail traders is just not there yet to support a fully fledged options market. Now, what could be successful, which is what is successful in most Asian traditional equity markets, such as Hong Kong, Japan, Korea, are sort of warrants or structured products. These are extremely retail friendly because the banks essentially rip the face off you when you trade these things, but they generate liquidity in the underlying options markets. So when I'm selling you a callable, options strategy, there are in the back end, I'm trading vanilla options somewhere. So as we see people bring out more retail-friendly, volatility-enabled products, that will give the liquidity to the underlying options market. And I sort of see that developing in probably the next 12 to 18 months as we mature as an industry, and hopefully the price goes up and more people get into crypto. And then lastly, something that I'm super excited about, and there'll be more details about this coming in the next weeks, is fixed income. So, we're dealing in this FX-driven market. If you look at the traditional fiat world, FX trades in the trillions of dollars, but the fixed income derivatives market is the market. The CME euro-dollar contract trades trillions of dollars per day of notional. So if Bitcoin and the derivatives market is really going to balloon, we're going to have to start trading interest rate swaps, credit default swaps, all these different types of derivatives that will be enabled in a fixed income market. But first, we actually need to have some bonds to price off of. And so one of the things that we're working on at BitMEX is we are actually going out to the market and borrowing Bitcoin unsecured from a few notable companies, which you'll find out shortly. And we're paying money out of our own pocket to issue debt that we don't need because we have enough money to start a market of the highest quality crypto companies issuing Bitcoin-denominated debt to start a fixed income market for our industry. And in probably the next 2 to 3 years, we hope that BitMEX, Binance, Coinbase, Kraken, Bitfinex, all the leading exchanges, miners, and trading firms are issuing their own paper so that we can establish a bedrock credit curve for crypto. And at that point, we really can take the next step in terms of derivatives liquidity. So that's all I've got for you today. I hope to see all of you bright and early at 9 a.m. tomorrow when I'm going to kick the fucking shit out of Nouriel Roubini. Thank you.